So these are the higher time frame alignments that you want to be using. You would be using really this left side for bias, and then the right side you'd be using for structure. When you're using and entry technically, or you could use three different time frames. The highest you would use for the bias, the middle one would be for the structure, and then the lowest time frame you would use for your entry. So you could use the weekly for your bias. You could then drop down to the 4 hour to find your structure. And then from the 4 hour, you would go down to the 15 to find the entry. Another common one that I will use is finding the bias on the daily, dropping down to the hour for the structure, and then dropping down to the 5 minute to enter from there. The 30-minute and the 3 minute is also a very common one. And there's a few different higher time frames that you can use for the bias. Once you start getting into the weekly, the daily, you can effectively just use those and then use the 30-minute for the structure and then the 3 minute for the entry. Another interesting bias candle you could use is either the 7 hour or the 8 hour. And the idea there is you're almost looking at each candle as its own session. So you would have the Asia candle, London candle, New York candle. It doesn't work out so perfect, but it works out pretty close. And if you were to use a 7 hour or an 8 hour, you could absolutely very easily go from the 30-minute to the 3 minute from there. So these are the time frame alignments. Again, the highest one is for the bias. Middle one, you're going to find the structure. And then the lowest time frame is where you're actually going to be entering from. So now let's go into the charts and I'll show you some examples of what this looks like. Okay, so we're going to start on the weekly. And again, weekly, we're looking for what? Looking for bias. So you can watch an old video I've done on predicting the next candle bias just by using kind of the closures and how things close. As you can see, this week closed above the previous week high. All right. So I can anticipate that this following week is going to continue bullish, ideally where we clear these highs. Okay, so we have the bias, bullish. What goes with the weekly? The 4 hour. So let's go here and we'll look for structure. We're still on Friday, so okay. So there's the opening gap. We got a gap down. So when we're looking for structure, what am I really talking about? We want to see the wick of the weekly candle, because remember, that's what we use for the bias. We want to see the wick of the weekly candle get created. Where would we want to see that get created? We want to take the 50% of this candle, and we want to see the 50% get respected if we're going to be looking for the bullish move higher. Okay, so where do we want to see that wick get formed? Again, let's do the gap down. This is the gap down. So we need to find a point of interest, which we have right here. Okay, let's change this to green since it's a bullish fair value gap. We got the 50%, which happens to overlap beautifully with the 50% of the previous weekly candle. Now, do we have to go down here? No, we don't. We don't need to go down to the OTE. We don't need to do any of that. Honestly, if I am expecting expansion, I don't want this massive retracement. Okay, we're sitting right around the 25% here. That's fine with me. So what am I looking for when it comes to structure? Some sort of order block get formed. Where would that get formed? What made this low? Call it here. Okay, and any type of gap down, you can effectively just try and visualize a candle being there. So this would be a white bearish candle down. Okay, we're looking for that V, that reversal. What did we do? We cleared the lows here. Okay, so that's nice. That's what I would want to see. And then we need to wait for a closure above this. And if we don't get that and it keeps going lower, that's no problem. We're just going to be adjusting where we want to see that order block. So we'll play a couple candles out. As you can see, we get that close. So when we get the close, we obviously respected the 50%, so I'll get rid of this now. This was that kind of point of interest. All right, we closed above. We have the bias bullish. The structure is confirming bullish. Now we have to enter. What goes with the 4 hour? 15. All right, same idea. What am I looking for? I'm looking for the wick of the 4 hour candle to get created. Get that same sort of order block, and then from here we can enter. So where is a point of interest? Well, I could go back to the 4 hour. I could take the 50% of this candle. This price is fractal. It's the same idea everywhere you go. So here's the 50% happening to overlap beautifully with where the order block was created. Another little interesting thing here is we have this fair value gap, also beautifully overlapping with the 50%. So this would be my point of interest. Does it mean we have to go into this? No, not necessarily. It just means that I don't want to see this get, I really don't want to see this get inverted. And if it did, it would need to be pretty quick to get that shoot back the other way. So we'll take, let's play some candles out. We'll see what happens. We got a lot of overlapping stuff right around here. Okay. As you can see, we have 3 different things overlapping. We got the order block, fair value gap, and then the 50% of the previous 4 hour candle all sitting here. Point of interest. Doesn't have to hit it, but I don't want to see it go much deeper than this. So let's play out some candles, see what happens. Okay, and we do not get a great retracement here. See what happens. Okay, so let's see what happens. Problem is we're about to like clear these out. Yeah, it's kind of tough to call. I would like to see a deeper retracement here. Sometimes you just don't get it. Technically, what made this low? If this was in fact the retracement, what made this low? Here. Did we close above? Not only did we close above, we got a retest here and then another expansion here. So if you wanted to long, you could do, put it on the swing low. You'd want 2R. I mean, ideally it aligns with some other sort of liquidity. Okay, if it doesn't, then sure, 2R. But, you know, where was that liquidity? Didn't I mark it out? Okay, so the liquidity we were looking at is actually all the way up here. So we could absolutely be early. Patience pays, but at the end of the day, this is the model playing out. Okay, if we are early, it's no problem. We still have these points of interest down here. We could re-enter if we need. Let's see what happens. And we get that large expansion through. Okay, so there's example 1. We used weekly for bias, we used 4 hour for structure, and then 15-minute for entry. Okay, let's use another example. We'll do the daily here. We're on NQ now. And this is ultimately like, this is how I would do a top-down analysis of the day. So I would look, did we stop here at any point of interest where we could reverse and seek these highs? I'll give you a second or pause so that you can look to see if we did. And you can even come to this day if you want. This was fairly recently, March 31st. 2026. So you could open this up on a chart and see if you can find if we are turning around at a point of interest. The answer to that is yes. We have this fair value gap down here. Just make it slightly more accurate. And then to about here. So we have this fair value gap. It's an old one. And what do you notice? Respected the 50% beautifully. Okay, so this, you know, could it be reversing? It could be, because it is happening from a relevant place, an old daily fair value gap. What else? Using the same idea of the previous example, this candle closed above the previous candle high, meaning I can anticipate the following candle to remain bullish. There's a couple other reasons why I can anticipate that. We got a sweep. So we sweep this low and closed above the previous candle high. This is actually an engulfing candle. It's an important candle to know, okay? So anyways, my bias for the following day would remain bullish. So what goes with the daily to find the structure? We're going to go to the hourly. All right, now same idea. Where are we looking for a point of interest? First, let's make sure, so this is 16, so that's market close. Market open is right here for the day. So again, what are we looking for? We're looking for the wick of the daily candle to get created so that we can trade the expansion. Where would I want to see that? Well, a point of interest. We have a fair value gap here. You can do like some other things. As you notice, the 50% happens to be right on this. So this is ultimately the area in which that I wouldn't want to see the wick really go farther down. Again, OTE area is fine, but if I'm really bullish, I don't want to see a retracement this far down. All right. So we'll just keep this there for now. And let's see what happens. We're starting off bullish. Remember, we have all of our liquidity up here. All right. Where are more targets, though, that we could maybe look for? You go one here. Really, this entire thing, all of these lows, they're just short-term liquidity targets. So we'll just mark those out. Yes, there's more here. It's all really trend line liquidity, though. All right, so again, would love to see a retracement down into here. And instead, we're just taking off. So it's no problem. It's just not, like, nobody should be chasing this. Because again, we just didn't get a retracement. Okay, so this is going to be fairly telling. If we close above this, then you could have missed this just because it didn't retrace. And then you could start trading continuation setups. See what happens. As you can see, we closed right on the high, so I would not be considering that. And then what happens? You get the expansion candle. And I mean, the market can just be challenging like this sometimes. And this is why the impatient trader just doesn't do well. Because sure, it would have worked this time. You could have went long at the close. What would you use? Well, you would basically be arguing this is the swing low, the new swing low. This candle right here. All right, this is your new swing low. And then you would want to look for 2R here. Again, works this time, but statistically speaking, you're going to be a losing trader over time because the market constantly does stuff like this. It'll close right at the point where it's invalidated. Okay. It looks like this is probably just going to play out. Ooh. Honestly, I hope this doesn't work. So you got ticked out there. Winning trade, but certainly not ideal. So this is one of those situations. And again, we didn't even enter on the 5-minute. Technically, we would have wanted to go down to the 5-minute and enter, but I mean, I just wouldn't have even entered this trade to begin with. So let's see if we end up getting that retracement down. Yeah, no, it's just going to keep going. So here's an example of, I mean, ultimately, you know, it worked, but it would have been really challenging because you just didn't get a wick. In fact, let me go to the daily, see what the daily looks like. Yeah. So if you look at this daily, it just didn't even create a wick. There's this tiny little thing here. usually you'd want to see something a little deeper. But we could do something like, and again, this is hindsight, okay? Okay, so using hindsight, I'll just show you again mechanically what it looks like. So what do we have? We have this bearish downtrend, a lot of failure swings. We just can't really get back up here. A lot of liquidity resting there, and we just keep making lower highs. What else do we have? A close through this. We closed below the previous candle low, and this is expansion. So I could anticipate the following day being bearish. Of course, we just looked and we already know that it will be bearish. Okay, so we want to go down to the hourly chart because we use the daily for the bias. Hourly goes with daily. Now, where would I want to see the wick of that daily candle get created? We need to find a point of interest. And what do we have? Well, first, we get this big inversion going back to here. Okay, the 50% happens to also line up on this order block. We also have, although it was already ticked into, bearish fair value gap. But again, we got the tick. Not the end of the world. It's just would have been nicer if it hadn't been hit yet. In fact, we have overlapping, so we would just combine these. Okay, so now we need to find the structure, aka where is that wick? So this is the new day open. We get a tiny little gap up. Okay. We hit this fair value gap and we get strong rejection. This is a little cheat code. Another thing, when you get these big wicks, large wicks, what I will do is I will take the 50% of the wick, not the full candle, the wick. If we hold the 50% of the wick and go lower, that's a bearish signature. As you can see, we didn't even tick the 50 and got a strong rejection down. All right. Now, did we close below what made the high? No. So we need to wait. Okay. And what are we noticing? Almost to the tick got that 50%. This is far more appetizing to me. Now, if you notice the 50%, we closed above. It's not the end of the world. The fact that we got this massive rejection that's fine with me. So I'll get rid of this. I now believe that we absolutely made the wick. I guess people would probably argue that it would be nice to clear that data high first, but unnecessary. I don't need to see that. So we could absolutely be looking at the wick. So what made this high? Not this one, because this was previous day, this is different. What made this high? These set of candles. All right, so we moved it from here, which ultimately this is what made the high, but we cleared this high. So we just got to adjust. So now let's play up some more candles. As you can see, getting resistance off this. And then we get the close. All right, so now we have the structure. It is aligning with our bias, which is bearish. What goes with the hourly for entry? The 5-minute. And we are doing the exact same thing. Where would we want to see the wick on the hourly candle form? A point of interest. We don't have any fair value gaps here. We have the old where the order block got created, so this would be a point of interest. But we also need to be a little bit careful just because it's not super obvious. So yeah, I mean, ultimately somewhere around this area would be great. Hopefully it doesn't take off without us. What time is it? 4:55. Let's open up with the new candle. Yeah, and it's just, of course, going to take off. Gosh, it's so annoying. And this is trading. I mean, it really is. It's annoying sometimes, because what you want to see. Let's go back to the hourly. The same idea. We would take the 50% of this candle, again, point of interest, all right? I mean, we're just not coming close to it. And this is the problem. When you get a big expansion candle, you can get what's called a runaway gap, and it just keeps expanding lower. And you just don't get a solid retracement. Did we make a wick? Yeah, we did make a wick. And then we flipped it here, okay, going lower. So if you had FOMO, yeah, and I don't even know where the hell the stop loss would be. It's a challenging stop loss, even. And this is actually, I mean, it's a great opportunity to show why so many people get stopped out for doing exactly this. Clear stop losses at the last protected high, which is this. This is a not even a 1 hour trade with a massive stop loss for 1 hour. Um, just not great. This is not a great trade, which is why you want to see the retracement. So I'm going to keep hoping for a retracement. We'll see if this terrible 1 hour trade ends up working out. But here's the 50. Okay. So this certainly would have been a wick. And then what would you do? So if you didn't take this trade and you were actually patient and you waited, what made this high? Right here. Oh, sorry, wrong thing. Right there. Did we close through? Of course we closed through. So you could do this. You could wait for the next candle on the retrace. So let's say you were somewhere actually right around the exact same entry. But now look what happened. Look at where the stop loss is. This is a new protected high. You no longer have to use this. And this is why patience pays. Now, go 2R from here. And let's see what happens. And you got it. Patience pays. A lot of people. Now, it still would have ended up getting paid out because you would have done something like this. Okay, so you wouldn't have been close to getting stopped out, but I mean, ultimately, it's just not necessary. All right. So there's another example. Again, this was obviously using hindsight. When we started at the daily, we already knew this was going to be bearish, but mechanically speaking, this is what you're looking for. Also, notice here, what did we do? Retraced back into that fair value gap. Strong rejection. You could pyramid in more there. Break even, probably somewhere on this low. A lot of opportunity to get in here. All right, so let's do one more example. We'll use the 4 hour as the highest time frame bias. So this is absolutely going to be for your scalpers. So it'll be the 4 hour into the 15 to find the structure, and then we will actually enter on the 1 minute time frame. All right, so we'll go to the 4 hour. We'll find bias here. What did we get? We got to close through here. Did it happen from a relevant place? Technically, we have this order block. We touched it and got a very strong rejection. Only thing that I hate about this is the flat candle. Flat candles that don't make a wick, I just don't trust. A lot of times you'll see a move the other way to create that wick. But given the nature of the video, we're just discussing time frame alignments. We'll use this. So we have a bias that is bullish. Where would we be seeking? Well, we have liquidity here, but we also have internal range liquidity here and another one here. Yes, you could overlap these, make it one. So these would be liquidity targets. So let's go down to the 15 now. And again, what are we doing? Okay, so now we're on the new 4 hour candle. So again, structure, what are we doing? We're finding where the wick of that 4 hour candle gets created so that we can trade away from it. Where would we want to see that happen? We have this. We also have this yellow line, which again, that's where we created that order block. So, I mean, ideally, we don't even actually dip down into here. We get some rejection from this area. So we still need to create that wick on the new 4-hour candle. So this is that fake out. I mean, maybe it's not, but for a lot of people, they're going to be going long here. Why? Because they don't really understand the rules of things and they just paint these out and they just say, oh, we got this order block, so we'll do the retest and then go higher. Again, maybe that will work, but no wick has yet to be created. So to me, it's just a little bit early. So let's see. Okay. What did we just do with this? We cleared this little low here. We got close to the order block, strong rejection. I would be good considering this, the wick. All right. So now what? What made this low? Now you can mark this out. So we need to see a close through this. Okay, so we got even lower. So we have a new low, an even better wick, to be honest. Again, we're getting pretty close to down here. Do we clear these? Yep, so we even cleared these. So we cleared that there. Okay, so now we need to move this. What makes this low? This candle right here. So keep playing candles out. Candle 2. We got candle 3. Okay. So that was actually a useful teaching moment prior to me going to that. When I said you have a candle 2 and a candle 3 here, you could have technically dropped down to the 1 minute from there. Okay. And try and trade this candle 4. All right. Now, as you can see, that's a massive wick. That was a big retracement prior to the move up. But anyways, now we have the structure created on the 15. Unfortunately, that was this big expansion candle. So we need to wait for a nice retracement. Again, marking out the 50. It also happens to overlap right around where this order block was created. So now let's go down to the minute. I know we get a lot of kind of overlapping things now. So I'm going to get rid of this one. I'm going to get rid of this. We're really far away from these. I'm going to keep this because this is the previous 15-minute candle. Also going to keep this because this is the order block we're working off of. You got that rejection here. So now what do we want? We want the wick of the 15-minute to get created. Where is it going to get created? Ideally somewhere around here, but doubtful. You get a lot of you get another fair value gap that's got created here. So let's play some 1-minute candles out. We'll see what happens. Got this dip down. This is also 10 a.m. So new 15-minute candle. Absolutely could have been the wick. Okay, we just got lower. Flat candle. So again, I don't trust those. Now we're going back down, retesting these areas. What made this low? I'm just going to move this one now. There. We did invert this, which is meh. Don't love it. But again, we're still near these areas, these point of interest. The 50% is still holding. Okay. So this isn't inherently bad. It's just something to keep an eye out for. As you can see now the 50% of the inversion is holding. Okay. As well as where we need to clear to get the order block. Okay, so what now? We just made another low. So now we're getting real deep into the retracements here. So we'd have to move this. This is the new, right? Because these candles made the low here. 50% still holding. Okay, so we got to close through. So technically, you could now enter. You'd make this the low. We really didn't clear those. Kind of unfortunate, but we made a good enough wick. We'll do 2R around there. We'll see what happens. And quickly go up. See if that liquidity would have been cleared at the top. Yeah, there it goes. So we finally cleared this liquidity up there. That, I mean, would have been probably my ideal target, but if that were the case, this would have been a kind of a bummer trade because all that drawdown again. But yeah, so that ends up working out. So there's 3 different examples. Using the weekly for bias, using the daily for bias, using the 4-hour for bias. If you're a day trade scalper, I generally just do the 4-hour 15 1. But that doesn't mean that when I first sit at a computer in the morning, that I'm not taking in the daily. Like, because I will. I'll look at the daily. I mean, if it's a new week, I'll look at the weekly. These are all important, right? You have all of these overlapping gaps here. This is just one massive weekly fair value gap. So we're in, a level of support here, which is useful contextually. Okay. Especially when you start stacking things. If I go to the daily, you start looking and what happened right on the 50%, you have this order block here. These are all useful areas where you might start to see rejection for a move or a reversal the other way. But nonetheless, this video is solely on how you use time frame alignments to structure and frame your trades. I hope that this helped. If it did, please consider liking and subscribing.